Rates look set to peak. The CEO of the world's largest container carrier tells this program that he expects costs to remain elevated. Matt?
Let's take a look at futures with just 10 seconds to go until the market opens. We see green arrows here, and we've seen risk-on indicators throughout the morning for both Europe and the U.S. So it should be an interesting session straight off the bat. As the markets open, let's pull up the global macro movers screen, the GMM on the Bloomberg, and check out the left-hand column. It's the equity indexes column. It'll populate as the indexes get out of the gate. The FTSE is your first opener, as usual, up now 0.2%. The IBEX gaining 1/3%. The IBEX yesterday, by the way, fell almost 1.5%. It was by far the biggest loser in Europe. So it'll be interesting to see if we get a decent rebound after Iberdrola weighed down that index, as well as Banco Bilbao yesterday. CAC 40 open up 0.5%, and you can see the DAX open as well, up 1/3%. So European equity indexes are opening higher as global shares test once again, for the most part, new record highs. Anna, we're definitely seeing these gains here, so maybe the reflation trade is back on.
Yeah, certainly European equity markets moving to the upside, picking up the baton, getting the message, getting the memo about the global stocks rally. So European stocks opening higher as global shares test yet another record. But the unremitting surge of the stock market comes amid a number of uncertainties, from the success of the global vaccination effort to pockets of exuberance in the markets themselves. Let's bring into the conversation Stephen King from HSBC, Senior Economic Advisor. He's been writing about the parallels of this decade to come with the roaring 20s of the last century, and also important differences. So let's get to him on that conversation. Stephen, really good to speak to you this morning. So the end of the pandemic, you write, the spread of new technologies, a transport revolution. You could be talking about America in the 1920s. You could be talking about now. What are the parallels that make you hopeful about the roaring 20s ahead?
Well, I should say, first of all, that the parallels are not all good. Some of the parallels are very, very encouraging. Most obviously that we're going through another technological revolution. And also, I suppose, that coming out of a pandemic, you can hope for fairly decent growth. But what's striking about the 1920s is that growth itself in the US wasn't actually that impressive. What you had instead was a huge increase in wealth inequality, with the kind of Gatsbys of the world coming through thick and fast. And of course, you had a stock market that went from a fairly depressed level after the First World War to the extraordinary highs of 1929, which of course then was followed by the crash. And what's striking about the valuation numbers in the US stock market currently is that they're not actually close to where they were in 1920. They're actually closer to where they were in 1929. So although there are some positive parallels, coming out of a pandemic is very encouraging, there are a whole bunch of other parallels which are, I think, somewhat more disquieting. I'd also note that from the central bank's point of view, there are also some interesting parallels. For example, in the 1920s, inflation for the most part was far too low rather than far too high. But the stock market roared ahead, even as inflation was very, very low. And again, this looks very similar to what we've seen over the last few years.
So, Stephen, we've seen some incredible things over the last few days and weeks with Reddit forums bidding up meme stocks that have nothing to do, prices far divorced from fundamentals. You've seen Bitcoin rise to almost $50,000 with Elon Musk putting $1.5 billion in from Tesla for a reason that's pretty difficult to understand. We have investors supporting junk debt with yields of less than 4% and duration bouncing around record highs. Did these kind of things happen in the 20s, at the beginning, or was that the kind of thing that you saw happening at the end?
Well, frankly, it happened at the end rather than the beginning. In 1929, there's a famous story about the shoe shine boy giving stock market tips. I think persuaded one particular investor to get out as fast as possible, realizing this was a bubble. And certainly some of the events of the last few weeks, I think, have been somewhat disquieting. The other thing I would just say is that, obviously during the pandemic, one of the things that central banks have tried to do is to offer as much stimulus and as much liquidity as possible, partly, frankly, to help the funding of government deficits. But when you've got central banks which are desperately trying to pump liquidity into the economy, if it doesn't show up in inflation in a sort of conventional way, it is likely to show up somewhere else. And throughout the history of central bank policies, what you see is a sort of battle between price stability on the one hand and financial stability on the other. And what tends to happen is if you achieve price stability over a long period of time, people then start taking excessive risk, which then leads to greater financial instability. It's what we saw, of course, before the global financial crisis, what we saw really before the dot-com bubble burst. And central banks at the same time also don't tend to talk a lot about bubbles because they, frankly, think they can't actually forecast what is and what isn't a bubble. So bubbles are left to sort of brew away until, of course, the point is reached when it all goes horribly wrong.
We are reading with interest your piece on the Roaring Twenties. Then the extent to which it'll be revisited, Stephen. It's a theme that many are picking up on. Business Week had a front page cover talking about the Roaring Twenties as well. We recently heard from the Bank of England about how they have expectations that some of the savings pools that we've seen build up during the pandemic, some of that is going to be spent on the other side. What are your expectations around consumer spending? Clearly, that'll be a Roaring Twenties theme.
Very much so, because one of the big features, of course, of last year was the enormous increase in savings effectively imposed upon households as a consequence of lockdowns. And we know that the big increases in savings have created a huge stock of potential pent-up demand for the future. So as lockdowns come to an end, as vaccination programs succeed in allowing that to happen, you'd expect to see consumer spending picking up pretty swiftly. And we already know, in fact, from countries like New Zealand, for example, that if you're confident that the virus is at bay, then life can go back to something approaching normality, looking at sort of domestic flight departures, for example. They've gone back to where they were before COVID. So things have changed in some countries, and I think with vaccinations, it gives an extra level of security with regard to returning to the demands of old. Of course, the tricky thing for policymakers here is having had this huge fiscal stimulus over the last 12 months, this huge increase in government borrowing. One big question out there is there room for the continuation of large amounts of government borrowing alongside a sudden, strong consumer bounce back? And of course, that's one thing which is, I guess, is spooking the bond markets at the moment.
Right, and there wasn't modern monetary theory back in the 20s, although I wonder if there's a parallel. Stephen, I want to hold you there for a minute because we want to talk about inflation as we see break-evens start to creep higher, as we see bond yields start to creep higher, because one of the points you make, and that we all should know from history, is the bursting of the bubble was when the Fed had to raise rates. Robert Kaplan on the Fed says a temporary rise in inflation doesn't surprise the U.S. central bank, but there's a strategist who's sounding off the sell-off alarm. If CPI, consumer price inflation, runs too hot for too long, we'll discuss this next, the history, the comparisons, and what to expect today with Stephen King. This is Bloomberg.
question for me will be, how persistent is it?
How much of a pop in prices do we get as the economy opens and consumers have money in their pockets? And then second, how sustainable is it?
If we're able to get people broadly vaccinated, we're going to make big improvements on unemployment, and it wouldn't be surprising to see the cyclical elements of inflation build.
The policy will remain accommodative despite the reflationary pressures building, so the front-end rates will remain anchored.
There could be some momentum building behind yields.
We're going to get the reflation of airfares and hotel rates.
Most of the investors believe that, you know, the inflation and rising rates are a bit out there, and that there's probably more downside risk to rates than huge upside.
Reflation has investors jumping on the recovery train as virus cases recede. This comes ahead of U.S. inflation data due later today. And BNY Mellon's head of market strategy is warning that an upside surprise in CPI could lead to widespread selling across the Treasury market. That, in turn, could force the Fed into yield curve control. Stephen King, HSBC Senior Economic Advisor, is still with us. And Stephen, we were talking about the comparison to the 1920s, and you write in your piece in the Standard that the Fed raising rates was the needle that popped the bubble. What do you think how do you think the Fed will react this time if indeed we do see rates, inflation rising up to a level that's concerning and rates start to creep up as the bond market gets more vigilante?
Well, first of all, it's worth noting that back in the late 1920s, the Fed was raising interest rates not so much because of inflation itself. It was frankly concerned about the stock market bubble. And some economic historians think that they probably raised rates too far, too quickly, and that's what caused the bubble to burst. Although, of course, once you've got the bubble in place, it's very difficult to manage it. As far as today is concerned, in fact, as far as recent decades are concerned, actual inflation has not really been a major problem. I think looking for inflation to pick up before raising rates is not really a characterization of how the Fed has behaved. What's tended to happen is that inflationary fears have risen, perhaps reflected in the bond market, and eventually the Fed's felt compelled to act, regardless of whether actual inflation is significantly higher or not. Again, recall before the global financial crisis, inflation was pretty well behaved. There were certainly concerns about the housing market, but as far as inflation is concerned, it wasn't a really major problem of the kind that people are describing today. And it's quite possible to argue over the next few months that the pressure doesn't come from higher inflation itself, it's rather from perhaps continuous exuberance in the financial markets, alongside perhaps some nervousness within the bond market itself and the feeling that perhaps the Fed would eventually have to act. Now, I stress this is not part of our central forecast at this stage, but the key point here is that when you've got a sort of epidemiological uncertainty of the kind that we currently have, there are an awful lot of sort of, if you like, known unknowns that could possibly happen over the next few quarters. And we should be prepared for thinking outside the box in thinking about possible outcomes that are not part of the current consensus. And I think the markets are becoming a bit jittery about that possibility.
Stephen, on that subject then, so if we see inflation expectations rise, and they have been a bit, and if we see inflation, but we don't see inflation pick up all that much, not certainly by really historic standards, maybe just to move slightly to the upside, what would constitute a policy mistake then if we see endless talk or continued talk about bubbles around various parts of the economy? What would constitute a policy mistake if that were the backdrop? Are we again on guard for premature action from the Fed, or is that really not a concern?
I think the issue at the moment is not so much a policy mistake, it's actually a policy impossibility. That if you're trying at the same time to keep interest rates low to generate decent recovery when you've got stable inflation, but at the same time financial markets get really carried away, it's very difficult to get both sides of that coin, if you like, correct at the same time. The more you keep rates low and you have a stable inflation rate, the bigger is the risk of financial assets rising in value significantly, and perhaps some associated increases in leverage. These are the kinds of, if you like, financial issues that have affected central bank policy in the past. So I think the idea there's one sort of magic policy that sorts everything out is not quite right. Frankly, the problem that central banks have in general is that they want to control inflation on the one hand, they want to deliver financial stability on the other. It is sometimes very difficult to pull off both at the same time.
Ben Bernanke, I'll never forget, in 2010, went on 60 Minutes, a very popular news program in the United States, and said, look, we can control inflation. Basically, with 100% certainty, it's absolutely no problem. Deflation is the concern. And I think a lot of people would agree that deflation is a bigger concern, but do you have faith that the central bank has that much control over inflation?
Well, the sort of research that's been done over the last 10 years suggests that each individual central bank has less control over inflation than was the case previously, which perhaps suggests that inflation is increasingly determined at the global level rather than the local level. I'd also note that for most of the last 10 years, despite zero rates, negative rates, huge amounts of QE, for most central banks, inflation has been too low rather than too high. So if it was so easy to control inflation, then they could have done it. The reality is that inflation is delivered not just by central bank policy, but also the health or otherwise of the financial system, the competitive environment in which you operate, the willingness of people to spend rather than save their money, the desire to repay debt or not, as the case may be. All these things, frankly, are beyond the control of central banks. I think it's certainly true that the Fed and others prevented the kind of deflation occurring that might otherwise have materialized post the global financial crisis. But in terms of delivering precisely a sort of 2% outturn over a number of years, that's been more difficult for central banks to achieve than perhaps they had expected.
Stephen, thank you very much. Thanks for joining us. Stephen King from HSBC, Senior Economic Advisor. Lots to think about there. And Matt and I will have the pleasure of catching up with Stephen again on Bloomberg Radio. That's at 9 a.m. UK time, so in around 43 minutes' time. Let's get an update on some of the corporate news we're following here at Bloomberg. Here's a business flash with Laura Wright.
Thanks, Anna. Societe Generale has fallen further behind its Wall Street rivals, posting its first losing year in more than 3 decades. It's losing ground in both stock and bond trading. In a bullish quarter for most peers, SocGen's usual strength, equities trading fell 7%.
We haven't posted a loss for some time now. So, you know, we are an old company, so I wouldn't say for how long that was. But you have to look at the real economic profit. We have a decline in the economic profit year on year, but the economic profit, what we call the underlying, is positive at 1.4 billion.
Twitter is warning of slowing user growth despite beating sales estimates for the 4th quarter. It saw a robust holiday season for advertising, but added fewer new users than expected. It also thinks last year's pandemic-fueled user growth won't continue. Twitter is exploring subscription services, but says the ideas are still a long way off. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much for that. Laura Wright with your Business Flash. Coming up, Legal & General Investment Management launches the world's first hydrogen ETF. Up next, we'll speak with the head of ETFs at that firm to talk about, well, the sector and the product. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 22 minutes into the session and looking at some gains across Europe. The broader equity index is up. The stock 600, 0.2%. You've got basic resources pushing that higher, and the pound right now trading at 138.28. We got some headlines coming from the European Union. Commission President Ursula von der Leyen, says that the target to vaccinate 70% of all adults, I have to guess she's talking about the entire European Union, will be met by the end of the summer. That sounds aggressive considering the state of the vaccine rollout across Europe, certainly in Germany, in France, in Spain. It could be going a lot faster than it is, and but we're getting these reassurances from Ursula von der Leyen that she will have achieved, the EU will have achieved a 70% coverage for adults by the end of summer. And I guess the key is adults there, right? So they're saying people, what's an adult these days if you're over 35?
I think they probably mean those who are able to have the vaccine, which is not children. Matt, we need to talk about another theme this morning, which is pressing. Legal & General Investment Management is launching the world's first hydrogen ETF. This ETF is designed to give investors exposure to the global growth of hydrogen as a low-carbon energy source. The £1.2 trillion asset manager has made the fund available to European and UK investors through listings on a number of exchanges. Howie Lee, Legal & General Investment Management Head of ETFs, joins us. Howie, great to speak to you. So why have you launched a hydrogen ETF? Why is it the time for hydrogen now?
Hi there, good morning. It's definitely time for hydrogen now because there's lots of exciting opportunities. If we think about reducing carbon emissions, hydrogen can actually reduce this by about 20% going forward. And the reason why it's so exciting right now is because there's this transition from gray to green hydrogen. And really what that means is rather than 99% of hydrogen that's currently made using fossil fuels, we're now moving down towards the green solutions. So this is a very key pillar to help reduce carbon emissions and also help decarbonize sectors where electrification cannot be the answer. And if you take a look at the growth rate of this, over the next 5 years or so, we're going to see about a 15% CAGR on to this growth theme.
So, Howie, who are the biggest takers? Who are the biggest end users here? Are we talking about, you think consumers will be using more hydrogen-powered vehicles? Is this city bus lines and industrial vehicles? What's the breakdown look like?
Yeah, there's definitely quite a bit of industrial use. It's very important to look at industries like the steel industry or the chemical industry. Again, electrification cannot be the answers for those. We're really looking at, in our portfolio, a collection of companies that represent the pure hydrogen economy. So that includes fuel cell manufacturers, hydrogen producers, fuel cell components, but also heavy mobility providers. And really, this is supposed to give investors a diversified exposure toward the hydrogen economy.
And how active or passive would you describe use of this kind of ETF as being? Howie, it's based on an index, but I wonder how much movement there is in that index that runs beneath the ETF.
Yeah, it's a very good question. So it definitely requires an active design to select and handpick these stocks. We work with dedicated experts at Global Data to really define the classifications here. So here in this portfolio at the moment, we're just shy of about 30 stocks. Broadly equally weighted is how the index is built. And the reason why we put this into an index is so that it is transparent and we systematically bring them back into a more equal weight format every quarter as well. But of course, we do expect this industry to have some risers quite quickly, at which point we'll be locking in the gains of those companies so that we continue to have a broad, diversified exposure to hydrogen.
All right, Howie, thanks so much for joining us. Howie Lee there, Legal and General Investment Management, Head of ETFs, Exchange-Traded Funds. Coming up, leaving at the top, Amundi's CEO steps down after building Europe's biggest fund firm. Yves Perrier will become the chairman of the French asset manager, and we'll speak to him next. This is Bloomberg.
Welcome back to the European Market Open. 30 minutes into your European trading session for Wednesday, and you can see European stocks moving very modestly to the upside, just up by 0.1% or so. US futures point higher, NASDAQ futures in particular up by around 0.5%. Let's get to some movers this morning. We've got Maersk on the move, the shipping business, that stock trading weaker after the outlook seemed to disappoint. The 2021 outlook that they published, they gave a range, and only the top end of it seemed to come somewhere close to what analysts had already predicted on the Bloomberg terminal. So that was in itself interesting. And the stock is being sold off as a result. Natixis, that particular stock trades higher after BPCE has made an offer, as we know, for the part of that business they did not already own. And Smurfit also in focus, up in Ireland, up by 2.5%. Lockdown heroes, box makers, those companies that play on the delivery theme that we've seen here during lockdowns in various parts of Europe, they've all been doing pretty well. And the CFO told us that was sustainable. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. The Arab world is celebrating the arrival of the region's first spacecraft to Mars. The UAE capsule called Amal, or Hope, has entered orbit after a 7-month, 480 million kilometre journey. 2 more unmanned craft from the US and China will arrive in the coming days.
The Mars orbit insertion sequence went exactly as planned to the dot. We were quite happy that it was smooth sailing into orbit around Mars. All systems have been checked overnight by the team. Everything seems nominal. We are now assessing the current orbit that we went into to see what we're going to do moving forward until we reach our final destination, which is our science orbit around Mars.
The audience for Sunday's Super Bowl fell to the lowest in over a decade. The CBS broadcast was watched by just over 96 million people. The 15% drop from last year is the setback for the National Football League, which played many of its games in empty stadiums this season. The figure is seen as a proxy for the popularity of live sports. The European Union's foreign policy chief is vowing to draw up more sanctions against Russia. Josep Borrell says his recent trip showed hostility toward the EU and that the bloc has to act more firmly with Moscow. He described Russia's handling of the Alexei Navalny case as merciless. Tokyo's Olympics are facing another challenge. Sexist remarks from a top official are undercutting public support and sparking a rare backlash from sponsors. The 83-year-old former Prime Minister last week disparaged women for talking too much. There are calls for him to step aside, with one sponsor pointing out the Olympic Charter bans all forms of discrimination. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
All right, Laura, thanks very much. Laura right there with your news. We've got breaking rate news for you. The Reichsbank expects to remain at this zero level for years to come. So no change there at the Reichsbank in terms of rates, and they don't expect to change for years. Now, let's get to our CEO interview. Amundi CEO is stepping down after building Europe's biggest fund firm. Yves Perrier will stay on as chairman of the French asset manager. He'll be succeeded as CEO by his deputy, Valérie Boston. Amundi has more than doubled its assets under management on Perrier's watch to 1.73 trillion euros at the end of last year. We're going to find out more about that transition from the CEO, outgoing CEO himself. Yves, thanks so much for joining us. Talk to us about what your plan is now as chairman for the continued development, especially post-COVID, of Amundi.
Well, thank you. Maybe, in introduction, as you mentioned, there will be this evolution of governance with Valérie Boston succeeding to me and me becoming chairman on the 10th of May after the general meeting. And I have considered that it was the time because I would say things are going well. 2020 was a year of continuing development, excellent results, and the last quarter of the year was the highest of the history of Amundi, and many strategic initiative, the renewal of the agreement with Société Générale, the acquisition of Sabadell in Spain, the creation of this new joint venture in China, and the launch of a new business line, Amundi Technology. So Amundi is in very good shape with a strategy which is of development, which is clear, engines of development. And so that was a good moment to make this transition with somebody who will be, who have all the skills to continue and even to amplify the deployment of the strategy of Amundi. As you mentioned, she has been working in Amundi since 14 years. It's a choice of competence, of continuity, and also shared values. And myself, yes.
Okay, no, so that's it's fascinating to hear you talk about your successor and give us your assessments of what your successor brings. So you've decided to leave on a high, I suppose, Yves. When you look back over the last 10 years, what's been the biggest change that you've overseen at Amundi, having built it into Europe's biggest fund firm?
I would say that the success of Amundi is based on 3 or 4 reasons. The first is that we have built a new industrial model. This new industrial model is a company where the client is at the center, where the organization is very efficient, which is at the same time global on investment platform, IT, and local with a presence in 40 countries. The second reason is the fact that we have been in advance in technology. We have all, we manage all our IT, which own software, and we have begun, in fact, to sell, and we amplify. And the third reason is a specific culture. I often say in Amundi, there is no star except Amundi itself. And the culture of Amundi is a culture of talented people, but very unified. And it's also a culture of strong execution. And we have demonstrated this when we have done acquisition like Pioneers, which were a great success in the integration. And so for the future, I think that Amundi has a lot of competitive advantages to continue to grow organically and also on acquisition.
You have really bolstered your ESG credentials, Yves, in terms of investing for change, climate change, social change, etc. And now we've seen a lot of other big firms like BlackRock joining or jumping on the bandwagon as well. Do you think this is a trend? Is it the trend for the next, say, 5 years?
For us, ESG has never been a marketing issue. When I created Amundi in 2010, to be a responsible investor was in the DNA, one of the 4 pillars of Amundi. And at this time, very little people were speaking of ESG. And it was a choice of conviction, the conviction that we were 2 years after the financial crisis, that the financial industry and the asset management industry has a responsibility also towards the society. In 2018, when we launched an ambitions plan, the key word was to generalize in ESG in all our investment process. And since the beginning of this year, all daily open fund of Amundi integrate this ESG process in addition of the traditional. We made advertising, and the key word is to be responsible is to be 100% responsible. So I don't matter if competitors launch new funds and so on. We have our own vision. Our own vision is to say a company has a responsibility, of course, to its shareholders, a responsibility to its client, but also a responsibility to the society in general.
Yves, thank you very much. Thanks for your time, and thanks for coming to speak to us here at Bloomberg TV today. Yves Perrier, Amundi's outgoing CEO. He'll remain, as we say, as chairman. Coming up on the program, we look into the world of mid-market private equity in this week's Money Undercover conversation. Danny Berger's here. She's going to speak to Simon Turner of Inflection Private Equity. That conversation is up next. This is Bloomberg.
I would expect freight rates to remain at an elevated level for a while in the first quarter, and after that we will start to see a normalization of the situation. The reason for the higher freight rates is very simple. It's an unprecedented bump in demand as the consumers came back in the market and as many companies found out that they had too little goods on the shelves.
That was Søren Skou, the CEO of AP Møller Mærsk, speaking to us this morning. Maersk shares are one of the biggest losers in the stock 600 this morning after the company put out a forecast that was, I guess, a little bit lower than the street was looking for. 8.5 to 10.5 billion in EBITDA. The street was looking for just the top range, 10.46. So still, the business has been incredible. Shipping has been incredible amidst the pandemic, and I'm not sure if this is going to slow them down any. Møller Mærsk isn't sending any super large vessels through the Brandenburg Gate, but here you can see what we're getting here. And does it look similar to what you're getting there, Anna?
Well, yeah, I'm not sure the snow settles at sea, so they should be fairly safe at Müller-Maersk. Matt, yeah, we've had plenty of snow here, not quite Berlin levels, but you know, I made it into work, which is a good thing. Now, it has been a busy run for deal activity. KKR this week said it deployed a record $12.5 billion in the fourth quarter. At the same time, European private equity shops are battling it out over Birkenstock, while hedge fund Marshall Wace is fundraising for a new venture capital fund. With this week's Money Undercover, here's Danny Berger with a guest. Danny.
Anna, thanks. I'm joined today by Simon Turner, who's the Inflection managing partner and co-founder. Inflection, of course, really one of the main names when it comes to mid-market private equity. Simon, first off, thank you so much for joining. In that environment that Anna's describing, it does seem like a really difficult one to invest when you have so much money chasing these various companies. In terms of valuations, are you able to easily find deals with price tags that you like?
Well, Danny, it's never been easy, I would say. And I think the mid-market enjoys some benefits over some of the larger end deals that you referred to. I mean, there are simply many, many more entrepreneurial businesses doing interesting things across the mid-market. You know, we think there are sort of 10,000 of those companies just in the UK alone. And the private equity industry buys perhaps 100 of those each year. So there's a lot to get at. All that said, on any given transaction, it can be pretty brutal. And in some sectors right now, of course, healthcare, technology, some parts of the business services landscape, the COVID resilient assets that have done well over the last 18 months, prices are formidable. Not impossible to find interesting pockets of value, but definitely some strong prices.
What do those interesting pockets look like to you? How do you find that, especially when, as you say, those are the quality names where valuations are pretty high?
Well, the mid-market operates in a slightly different way to the larger end of the private equity market. You know, it's very relationship-based. Expertise and what you bring as a partner to the management team, to the entrepreneurs you're working with, counts for a great deal. You know, entrepreneurs are very thoughtful about who they want to live with for the next 5 years, what they require in terms of their own growth plans. So there are many ways of decommoditizing your capital, moving the discussion away from simply price into perhaps some more important things in terms of the overall, you know, value growth plan. And just to dwell on that for a moment, Danny, I think one of the things that we've really observed over the last sort of COVID-affected period is a real hunger from entrepreneurs to explore how they should be more rapidly evolving their business models. Somewhat in the light of COVID, but also, so I think just perhaps cognizant of what technology, what digital enhancement and so on can do for them. And I think if you can bring some of that to the table as well as capable deal doing, then I think you're in with a real chance of doing some interesting investments.
Right. And I know when we talked last, COVID, of course, is part of the reason that you're explaining why this digital transformation is happening. But I know you also see some Brexit side effects as well in there in terms of entrepreneurs in the UK.
Yeah, I mean, we've lived with the imminence of Brexit for several years now. It's about 4, isn't it? So I think no sort of capable business person can be sort of surprised that it's arrived in one form or another. There's been plenty of time, I think, for investors to position portfolios and for entrepreneurs to position their businesses. So for us at Inflection, it was relatively easy to not be exposed to some of those areas that provided Brexit chafing, because they were always likely to, highly regulated cross-border financial services, fishing, the crossing of borders with physical goods. That's not really our thing. Technology services, healthcare is. But for entrepreneurs, they have an excellent habit of finding workarounds. And it's one of the great pleasures actually of working in the private equity industry, is that sort of, people talk about animal spirits, don't they? But, is the ability of the entrepreneur to look at a situation and just find alternative routes to growth. So, if Europe's a bit tough, they go to America. If America's a bit tough, they go to Asia. If they can't get the workforce, in to do what they used to do, they find very effective ways of working from home and using technology.
Right.
That dynamism is very hard to quantify, but it's kind of the essential element in many ways.
Right. Speaking of working from home, how has that been for you and Inflection, specifically fundraising? Because that, of course, is something that's driven by relationships as well.
Yeah, I mean, it's changed everything, but remarkably easily. I mean, even for sort of old Luddites like me, you sort of get used to how to do this stuff. I mean, we've been sort of on-off fairly fully virtual for the whole period of time, and I would say remarkably effective. It changes subtly, I think, some of the ways that you do work there. I mean, we've had a very successful year, but it comes at a somewhat brutal cost. I think I think keeping the niceties and the social engagement going within a team, just requires a bit more sort of thoughtfulness. So I think that there's that dynamic. But specifically to your point around how you actually do business in this environment, well, we've bought businesses virtually, albeit I would accept that we had long pre-existing relationships with the teams there, and that's very typical for us. We sold businesses totally virtually and very successfully, where the management team never met the buyer, but there was plenty of information available. And the private equity industry has adapted to virtual fundraisers pretty well, and in many ways it offers great tools. I was chatting to some LPs yesterday who kind of like it because they get less rationed time with the GP and the people who run our sector teams and so on. They can spend a bit more time in the data and less time on planes and so on. So I think that there are efficiencies that we all get used to.
Right. I mean, it will be interesting to see how long we need to get used to that environment, certainly. Simon Turner, Inflection Managing Partner and co-founder, thank you so much for joining us. Matt.
I'll pick up, Danny. Thanks very much. Really interesting conversation there around private. Go ahead, Matt.
I'm Matt.
You are. Okay. Apologies.
No, just messing around. This is what happens when you have, post-Brexit, trans-channel show. Coming up, Trump's trial gets the go-ahead after the Senate decides that it is that it is constitutional. It was. I think the vote was like 56-44, something around that. We'll have the details next with the exact numbers for you. And this lawyer's performance, that is coming up. This is Bloomberg.
This is nothing less than the political weaponization of the impeachment process. Pure, raw sport, fueled by the misguided idea of party over country, when in fact both will surely suffer. I can promise you that if these proceedings go forward, everyone will look bad.
That was David Schoen, one of Trump's impeachment defense attorneys. The Senate has cleared the way for the trial of President Donald Trump, rejecting arguments it was unconstitutional now that he's left office. But some of the lawyers' performances sounded more like a filibuster than an actual defense. Joining us to talk about it is Bruce Einhorn. Bruce, I'm referring to his other lawyer, Bruce Castor, who is going on about getting lost in the building and the records his parents used to have. And does it really not matter what the lawyers do since they can't, since it's unlikely they'll lose?
Well, you do have a point that a lot of this is performative, right? Because we do have an idea of how the Republicans in the Senate are going to vote, regardless of what the arguments are. That said, it was not a great day for Trump's lawyers, and even some of Trump's supporters in the Senate were concerned enough about it to comment afterwards, to complain. The most surprising thing, I think, of the day was that there was one Republican who changed his mind. Bill Cassidy from Louisiana joined with the 5 others who last month had voted to support the trial as something constitutional. This time there were 6. So the Trump lawyers lost, at least on this initial vote.
So the math's changing just a little bit. Bloomberg's Bruce Einhorn, thank you very much. Thank you very much for the briefing. It's snowing in Berlin, sun shining here in London. Surveillance is next. This is Bloomberg.
Stocks push higher as the Fed's Robert Kaplan weighs in on the inflation debate. He tells Bloomberg temporary spikes are to be expected. PIMCO thinks the market is being overly optimistic. Trump's second impeachment trial steams ahead. The videos of the mob storming the Capitol and the former president's words are key to the prosecution. And earnings season ramps up in Europe. We've been speaking to executives from Maersk, Heineken, Equinor, and Société Générale. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. We also have a fantastic exclusive coming your way. This is from the French banking giant BCPE, so I'm really looking forward to speaking to the chief executive there very shortly. Now, global stocks pushing forward on an 8-day winning streak on the heels of positive corporate news, improving virus trends, and also U.S. stimulus plan. I'm looking at renminbi, probably the one that's quite interesting in today's trading session, that yields on the 30-year Treasury, holding at 1.9% after crossing the 2% threshold earlier this week. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The Senate has voted that the impeachment trial of former President Donald Trump is constitutional. It clears the way for arguments to begin on whether he incited insurrection at the U.S. Capitol last month. Senators voted 56-44 to proceed, rejecting the argument that Trump can't be tried because he's no longer in office. Now, the Arab world is celebrating the arrival of the region's first spacecraft to Mars. The UAE capsule called Amal, or Hope, has entered orbit after a 7-month, 480 million kilometer journey. 2 more unmanned craft from the US and China will arrive in the coming days.
The Mars orbit insertion sequence went exactly as planned to the dot. We were quite happy that it was smooth sailing into orbit around Mars. All systems have been checked overnight by the team. Everything seems nominal. We are now assessing the current orbit that we went into to see what we're going to do moving forward until we reach our final destination, which is our science orbit around Mars.
And Tokyo's Olympics is facing another challenge. Sexist remarks from a top official are undercutting public support and sparking a rare backlash from sponsors. The 83-year-old former prime minister last week disparaged women for talking too much. There are calls for him to step aside, with one sponsor pointing out the Olympic Charter bans all forms of discrimination. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. I don't even know what to say. Now we know the truth. Women speak too much. Minds wander. You kind of just don't know how people still say that in 2021. Now, one of the biggest risks for investors in 2021 is betting that vaccines are guaranteed to bring a quick end to the pandemic. That's according to Robert Mead from PIMCO, who says it's easy for markets to get a little too optimistic. Meanwhile, we've been asking some of our guests for their take on the reflation trade.
The question for me will be, how persistent is it?
How much of a pop in prices do we get as the economy opens and consumers have money in their pockets? And then second, how sustainable is it?
If we're able to get people broadly vaccinated, we're going to make big improvements on unemployment. And it wouldn't be surprising to see the cyclical elements of inflation build.
The policy will remain accommodative despite the reflationary pressures building. So the front end rates will remain anchored.
There could be some momentum building behind yields.
We're going to get the reflation of airfares and hotel rates.
Most of the investors believe that, the inflation and rising rates are a bit out there, and that there's probably more downside risk to rates than huge upside.
Well, joining us for more on the markets is Laura Cooper from our MLive team. Laura, so I woke up this morning, I read the PIMCO piece, I read your fantastic blog, and I don't really quite understand why it's such breaking news. I mean, is the market kind of, were they already pricing in a full recovery? Because we've also had warnings from central banks that actually the vaccine is not a cure-all, given also the mutations and variants.
Well, certainly when we look at kind of what markets are pricing in with respect to the reflation trade, they are kind of forward-looking to those upbeat recovery prospects, regardless of what central bankers say. So the small cap Russell 2000 in the U.S., for example, which is really the favored inflation trade there is up 16% year to date. That's the strongest start to a year since 1991. So there is the question of, does this reflation trade maybe should it be tamed somewhat, because we do have these risks ahead. There could still be stumbles on vaccine rollouts. We could still see, a challenging labor market recovery. That's something that Powell has flagged, with millions of Americans still at work. And he's set to speak on that later today. So I think markets will be clued in more to what policymakers are saying and whether this reflation trade can continue at the momentum that it has been.
So I guess, Laura, the biggest question for markets right now is, are we going to see a recovery led by the stimulus, or are we going to have worrisome inflation? What does it mean for how the markets actually, get positioned? If you're an investor right now, do you hedge, or do you actually need to take a take a side?
Well, I think certainly right now, when we're seeing kind of, rising yields, this rate sell-off, that's largely been, underpinned by these upbeat growth prospects accompanying those rising inflation expectations. So that's ultimately, still positive for both for stocks in this current environment. I think it's a case where we do see kind of rising yields extend even further, and that starts to sap that earnings yield premium over treasury rates right now that could begin to spill over in terms of risk sentiment. But, I think it's very difficult for an investor to position right now because, there's this inflation debate is still alive. And I think, clearly, break-evens are capturing that, but I wouldn't necessarily kind of purely go to inflation hedges right now because we don't yet know whether these inflation expectations will feed through to actual inflation. And we won't know that for several months.
Laura, what do you do with dollar right now?
Well, I mean, the dollar has been interesting over the past few weeks. It has been bid, and that's, largely been reflective of a couple of stories. One is just this U.S. growth exceptionalism, given the fact that vaccine rollouts are stumbling in Europe. We also have just, speculators are positioned on the wrong side of that bullish trade. So we have seen some positioning squeezes. But certainly with fiscal stimulus to come through, this widening deficit, and ultimately, growth recoveries eventually abroad, I do still think that the medium-term fundamentals do point to dollar weakness. But I think in the near term, markets are focused on the CPI print today and what Powell says. So I think that's really why we've seen this steadying in the greenback in the session today.
Laura, thanks so much. Laura Cooper there from, our Markets Live team, of course, with some great insight. And I urge everyone to go and check out our Markets blog, which is pretty cool. It's both available on the terminal and on our website. Now, coming up, taking control, a deal in the French banking sector. SBPCE Group offers to buy out minority shareholders in investment bank Natixis. Our exclusive interview with the BPCE chief executive is up shortly. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's bring you the latest on a deal in the French banking sector. The financial group, BPCE, has offered to buy out minority shareholders in listed investment banking unit Natixis. Now BBC is offering €4 a share for the 30% of Natixis it doesn't already own. Of course, BPCE is the second largest banking group in France. Well, joining us now for an exclusive conversation is Laurent Mignon. He's the chief executive of Group BPCE. So thank you so much, Mr. Mignon, for joining us this morning on the back of this very important announcement and operation. Why are you taking Natixis private now?
Well, good morning first. And well, we're taking it now because we're launching an important project of simplification of our group ahead of our strategic plan that we will announce in June. We think that this transaction, by buying back the minority shareholders, will allow us to streamline the way the group is organized, better organize our insurance business and payment business closer to the two retail network, Caisse d'Épargne and Banque Populaire, that we have, and structure the businesses, the global business that we have, the investment banking and the asset management banking, into a new division called Global Financial Services that will be fully owned by BPCE. That's really why we do that.
Well, and what kind of timeline are you looking at? So when you look at, when the squeeze out would actually be completed, when do you think, how long will this take to do?
Well, we launched the bid today. Then we launched to the AMF, to the market authority today. Then it will take some time for first the company Natixis to make a formal position on the transaction. Then the AMF has to give his green light, and as we are a regulated entity, we have to wait for some authorization in some countries. So it may take up to June and potentially up to September, depending on how long the regulatory authorities answer to this transaction. So it may take 3 to 4 months to realize.
There were a number of missteps, of course, at Natixis in the last couple of years. Do you think this operation puts all of those missteps behind it?
Well, I think the mistakes have been, dealt with. We have changed the management of Natixis a few months ago. A significant action had been taken. The performance of Natixis during the fourth quarter were very satisfactory, to a very good level. So they show that these missteps are behind us. So it's not a transaction that put the misstep behind. We do the transaction because we want to simplify and because we think that being a listed company today is not the best thing to fund your growth. We, as a group BPCE, have 16% core Tier 1 ratio. We have, as a mutual group, the ability to generate capital on a yearly basis. So we don't view that being listed is the right way to fund the growth. So it's not a question of putting back mistake or things. They have been dealt with by the management. The reality is, do we need to be listed? Do we need to have a listed company to fund the growth of our business? And our answer is no. As a mutual group, solid mutual group with significant capital, we've got more than 70 billion of core Tier 1 capital, 16% of core Tier 1 ratio, significant profitability, so ability to generate capital every year. We have the means of funding our growth of all our businesses by ourselves.
So do you also expect actually to take part in a wider consolidation effort in the banking sector?
Well, we are looking to whatever can happen, but I think that the consolidation today is more on a local basis and global basis. that there is potentially, if you do consolidation, you need to create synergies or to find ability to make that the consolidated group is more efficient than each of the banks by themselves. Today, on a European basis, to find a transaction that makes sense in terms of synergies is not obvious. So we're looking to expand our businesses. Asset management business is one. We can expand our specialized financial services businesses. So we're looking to opportunity within our businesses to go for big transaction. I'm not sure it's the right timing and that there's the conditions today to make a profitable transaction.
So do you think that France is consolidated enough, or eventually will France just need more banking consolidation?
Well, I think France is a pretty consolidated market in terms of banking already. You have 4 big banks that are dominating the market. So I don't view significant consolidation in France.
When you look at the €4 per share, is the price fair? Was there any discussion about, changing that price for it to be higher? We've seen quite a lot of, I would say, zigzags in the price of Natixis.
Well, the price of Natixis has reflected the banking sector movement, which has been volatile around the last few years. But I think the price is offering a significant premium compared to for Natixis shares. It's 16% premium compared to last Friday closing price, which already included some element of anticipation of a potential transaction, and the share price has increased by 30% since the beginning of the year. But if you look to the price, it's also 98% of the tangible book value. Tangible book value stands at 407. We're proposing €4 per share. Very little number of banks in Europe are valued at their tangible book value. Most of them are below tangible book value. On average, it's 0.53% of 0.53 of the tangible book value. So it's a 80% premium compared to the average price of European banks. So yes, it is a fair price, very fair price, and we're doing it at a time when the COVID crisis impact on the market is behind us. So I think it's important. We didn't want to do a deal at a non-fair price. It is a fair price. It is a significant premium. It offers attractive liquidity and price to minority shareholders at the right time.
Mr. Mignon, I think we've addressed it already, but I just want to make sure I 100% understand. When you look at Natixis investment management, does it stay private or could it eventually raise capital?
Well, it will stay. It will become private it is private within Natixis today. It will become a subsidiary of the Groupe BPCE. So as a private company, now it further in the time, if needed for strategic initiatives that make sense, we need to use the capital of that company for partnership and so on. Why not? It is not on the table. This is not what is there today, but this is not something we rule out for the future.
And how do you see the risk profile of Natixis CIB with actually your retail business?
Well, I think we are a universal bank. We want to deal with all kind of client base, including big corporate and institutional business. And Natixis CIB is really addressing that part of the business for us. And they do that with a strong expertise, strong ability to be on the side of our clients and the client of the group and bring them valued solution. And that's really what we want to have. So risk profile has to be obviously more geared to corporate banking, to being less pure market geared business, but it's appropriate. And the strategy that is being followed by Natixis CIB today is with full backing of the group.
Thank you so much for joining us. Laurent Mignon there, the Chief Executive Officer at the Groupe BPCE, with, of course, some important insights into the transaction that we've been talking about all morning. Now, coming up on the program, we hear exclusively from the Chief Executive of Etihad about the road of recovery for the ailing aviation industry. Our Manus Cranny brings us that interview, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Twitter's warning of slowing user growth despite beating sales estimates for the fourth quarter. It saw a robust holiday season for advertising, but added fewer new users than expected. It also thinks last year's pandemic-fueled user growth won't continue. Twitter is exploring subscription services, but says the ideas are still a long way off. Ride-hailing company Lyft is inching closer to breaking even as a result of deep cost cuts. The company is squeezing more revenue out of each customer and says it will turn a quarterly profit this year. Ridership is still down due to the pandemic, and the company isn't giving a forecast for the quarter due to uncertainty over the speed of the vaccine rollout. Now, Société Générale has fallen further behind its Wall Street rivals, posting its first losing year in more than 3 decades. It's losing ground in both stock and bond trading in a bullish quarter for most peers. SocGen's usual strength, equities trading, fell 7%.
We haven't posted a loss for some time now. You know, we have an old company, so I wouldn't say for how long that was. But you have to look at the real economic profit. We have a decline in the economic profit year on year, but the economic profit, what we call the underlying, is positive at 1.4 billion.
And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now let's take a look at some of the things to watch out for later today. The ECB President, Christine Lagarde, speaks in a webinar organized by The Economist. That's at 1 p.m. UK time. And then later this afternoon, Bank of England Governor Andrew Bailey will deliver his Mansion House speech. That comes at 5 p.m. UK time. In the U.S., we get earnings from Uber, General Motors, and Coca-Cola. Earnings season, of course, is in full swings. So we'll have plenty more, of course, on that. We'll have plenty more on the markets as well. So let's get straight to the markets. I'm looking at global stocks, pushing higher in certain cases after an 8-day winning streak, on the heels, of course, of pretty positive corporate news, also improving virus trends and U.S. stimulus plan. What also I'm looking at is actually platinum. I don't look at platinum very often, but there was a little bit of a move with platinum rallying to a 6-year high on expectations. It will benefit from tight supplies. Coming up, Democrats clear their first hurdle in Trump's second impeachment trial.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
is actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a taxi.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union's policy chief is vowing to draw up more sanctions against Russia. Joseph Borrell says his recent trip showed hostility towards the EU and that the bloc has to act more firmly with Moscow. He described Russia's handling of the Alexei Navalny case as merciless. According to early data from the UK's vaccine programme, one dose of the Pfizer-BioNTech jab gives 2/3 protection against coronavirus. With 2 doses, that rises to around 80%. The UK has now given more than 13 million doses of either the Pfizer or Oxford Astra jabs and has vaccinated more than 90% of over 80s. And the audience for Sunday's Super Bowl fell to the lowest in over a decade. The broadcast on CBS was watched by just over 96 million people. The 15% drop from last year is a setback for the National Football League, which played many of its games in empty stadiums this season. The figure is seen as a proxy for the popularity of live sports. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the Senate has affirmed the constitutional basis of former President Donald Trump's second impeachment trial, clearing the way for arguments to begin on whether he incited an insurrection by inflaming the mob that stormed the U.S. Capitol last month. Now, prosecutors say Trump must be convicted of the most grievous constitutional crime, even though he's gone from the White House.
They want to call the trial over before any evidence is even introduced. Their argument is that if you commit an impeachable offense in your last few weeks in office, you do it with constitutional impunity. You get away with it.
Well, joining us for the very latest is our Stephanie Baker, our senior writer, who's been following this from the very beginning. Stephanie, I don't know whether anything changed in your mind of what we'll see. So, is it a timeline that it will just be shorter, quicker, or are we going to see more Republicans vote in favor of conviction?
We had one additional Republican vote to proceed with the trial. If you remember last month, there was a vote in the Senate about whether or not to dismiss the trial, and only 5 Republicans voted with the Democrats. This time you had 6, but obviously it's still far short of the 17 needed to convict, and it looks like the Republicans will be able to vote against conviction without weighing in on the merits of the case, just saying, it's unconstitutional to impeach a former president. I don't think much change today. We'll see more of the Democrat argument, more video. They will lay out their case documenting Trump's actions leading up to the January 6th assault on the Capitol. Maybe something new will come out on that. But, you're right. I think this is going to be a very quick trial, as Democrats don't want it to interfere with Biden's legislative agenda.
Stephanie, at the end of the trial, what will we be wiser on? Who's controlling the Republican Party? I mean, we also heard from, through sources that Mitch McConnell is saying basically this is a matter of conscience.
The real question is how many Republicans break ranks and vote to convict, and what happens to them. Obviously, they know that if they do so, they could be putting their political futures in jeopardy, given the backlash from Trump. For any of them up for re-election, he could mount, back a challenger in the primaries. as a way of, responding for, their votes. So, if they get to 6 Republicans, maybe a few more, I think it is significant, but there's, it will only highlight the split within the Republican Party and how, Trump still retains a grip there. And if he's not convicted and not barred from office, he will continue to have that hold over the Republican Party.
And so what will the Republican Party become, Stephanie? Will it be even more Trump's base? I mean, can we even, start imagining a third party emerging from the split?
Well, I think that is the ultimate threat that Trump is holding over them, that this Patriot Party, he could start his own party, and that would, only help, split the Republican vote and help Democrats in some cases. So I think this is the most interesting thing to watch over the next couple of years is what happens to the Republican Party. Mitch McConnell, how does he vote on this? Many say that this could be his last term. Does he actually break ranks and vote his conscience? I mean, I think that would be hugely significant. But I do think that the Republican Party is split between the traditional Republicans, the sort of Ronald Reagan Republicans, and the Trump Republicans, and how that plays out over the next 2 years will have huge impact on where the country goes.
Thank you so much. Our senior writer there, Stephanie Baker, of course, looking at the Trump administration, at the Biden administration, and, of course, the impeachment trial. Now, in the last couple of minutes, we're just getting some news out of Hong Kong. Of course, we try and bring you an update on when cities decide to open or go further into lockdown because of COVID-19. Just moments ago, Hong Kong saying it plans to reopen some of the sports venues and allow dine-in services. So that's from Hong Kong. And, of course, just yesterday, we found out that maybe Germany will take a bit longer to reopen than previous plans. Now, let's also talk about the fallout from the pandemic on corporates. One sector that has been brought to its knees, of course, aviation. Earlier, Bloomberg's Manus Cranney spoke exclusively to the Etihad chief executive about the long path to recovery.
When this pandemic first came into mainstream reality, probably this time last year, the forecasts then were a recovery to 2019 passenger volumes by 2022, and the more pessimistic ones went into early 2023. Here we are a year later, and that forecast, sadly, hasn't really improved. It's probably moved almost linear, so at the moment where we're at is probably 2023, when we ever get back to 2019 numbers. But as I said before, the important thing here to do now is to adapt to the new reality of all of this.
I've had my vaccination. Where are you with crew vaccination?
So the big story today, and I'm absolutely delighted to share it with you and your viewers first, is as follows. Etihad today is the world's first commercial airline to operate with 100% vaccinated crew and cabin crew.
Is that a choice of vaccines or is it one vaccine?
So we've adopted one vaccine, the whole of our organisation, me included. I elected very early this year to get vaccinated. And I really want to go on record to thank the amazing participation from the whole of the Etihad family, because we're doing this because it's the right thing to do for the right reasons, for ourselves, our loved ones, but importantly in our line of business, for the travelling public, our guests.
So that's with Sinopharm, yes?
It's the Sinopharm vaccine.
How critical is a vaccine passport to getting confidence in all the travelling public back on these planes?
So I've been calling this one out pretty much since March of last year, that some form of wellness certification will be part of the way forward. In the same way visas used to be issued as a rite of passage, it's very easy to link the status of somebody's testing or vaccination.
Well, that was the Etihad chief executive, Tony Douglas, speaking exclusively to Bloomberg's Manus Cranney. Now, coming up, with Bitcoin up 60% so far this year, is it time for regulators to approve a cryptocurrency exchange-traded fund? Well, we'll discuss that next, and this is Bloomberg. economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Ride-hailing company Lyft is inching closer to breaking even as a result of deep cost cuts. The company is squeezing more revenue out of each customer and says it will turn a quarterly profit this year. Ridership is still down due to the pandemic, and the company isn't giving a forecast for the quarter due to uncertainty over the speed of the vaccine rollout. Cisco is trading lower after the firm reported a big decline in enterprise sales. The firm says the pandemic isn't fully behind us. A large portion of Cisco's revenue comes from purchases of network hardware by government agencies, companies, and phone service providers. That makes its results an early indicator of business confidence. And former NFL quarterback Colin Kaepernick is co-sponsoring a blank check company with a focus on delivering a significant impact financially, culturally, and socially. Working with a private equity firm, he wants to identify brands that have an established customer base over in the US with an enterprise value north of $1 billion. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. So how should regulators approve a Bitcoin exchange-traded fund? Trying together two of the biggest trends in investment, pressure has been growing on the U.S. Securities and Exchange Commission to allow an ETF focused on cryptocurrencies. Well, joining us to discuss all things ETF is Keshava Kashastri, head of capital markets at DWS. Keshava is also chair of the Investment Association ETF Committee. So, Keshava, thank you so much, as always, for coming on and making us smarter on exactly what we're looking at. Keshava, when you look at some of the Bitcoin and cryptocurrency mania, what does it mean for ETFs?
As you know, as of now, there are no ETFs available until yesterday. There were only ETNs and ETPs. As of yesterday, in the Bermuda Stock Exchange, there was a first product issued. Obviously, a lot of issuers and participants are encouraging the regulators to kind of look at this. Obviously, a good regulatory ecosystem is very important. So both sides within Europe, but also in the US, issuers are speaking to regulators, educating them, and see whether we can get an approval to launch such a product. We ourselves within DWS do not have an ETN or an ETP as of now on Bitcoin, but obviously, as usual, we look at the entire market, and investors are speaking to us about their kind of interest in exposing to that particular asset class.
Keshava, I mean, how quickly could we see an ETF Bitcoin? And if you look at what's happened in the markets in the last 2 weeks, which was frankly really crazy because of the retail frenzy, and some calling it the international flash mob, what does it mean for the ETF space?
I mean, there is, as I mentioned, there are ETPs available, and we are in discussion. There's active dialogue with the participants and also with the regulators to see whether there is a safe and well-structured product that's available to the market. So the institutional investors, but also retail investors can access that product in an efficient and a liquid manner. As you know, there are some considerations that a lot of the regulators are looking at. And also, some of the questions about some of the energy needed for some of these crypto assets. So we are, the whole industry is kind of looking at this with keen interest, and regulators also listening to the conversations. As you know, in the UK, the FCA has made it not possible to kind of distribute the products to the retail market because of some of the concerns that they have, and it's only natural to have that dialogue with the regulators, national competent authorities, to make sure that we bring a product to the market that's behaves as expected by everybody.
Keshava, when you look at some of the things that we've been looking at really clearly, so it's a week after I guess the Reddit situation. Is the battle between Redditors and hedge funds now over?
Sorry, can you repeat that question? There was a bit of a delay.
Yeah, so is the battle between hedge funds and the Redditors over? And again, does it mean that actually ETFs can go back to functioning a little bit more normal?
I mean, the ETFs actually function very normal. If you look through the whole period, there are obviously certain equity stocks that basically were impacted in terms of price rally, but the ETFs are actually behave literally as they expected. Obviously, the price of the ETF increased with some of the equities changing. And on the commodity side, slightly different, as you know, on the silver. But I think the ETF as a structure and as a market and as an ecosystem actually behaved exactly what it should. There was no, kind of impact on that at all from the discussion in that particular
Keshava, did it actually, ask for, or there were certain ETFs that did particularly well during those 2-3 weeks because of what was happening elsewhere in the markets?
Yeah, I mean, one particular ETF had those securities in the baskets that basically were rallying or going down subsequently afterwards. The price of the ETF went up or went down because that particular basket is made up of those particular securities. But the ETF exactly behaved and performed. And if you look at creation redemption, some of our ETFs had exposure to some of those stocks. There was no impact on creation redemption or liquidity in the secondary market. Obviously, the price increased with the underlying basket and volumes increased with the investors basically using those products. But as an overall ecosystem, as a product, the ETF really did perform as it says on the tin.
What happens in ETFs from now until the summer? Is there going to be increasing appetite for them in general in Europe?
Absolutely, we have big commitment from the board within DWS, but also the industry that I speak to, especially as you mentioned. I'm the chair at the Investment Association in the UK, but also at the FAMA. We've been speaking to some of our members. The whole industry is really focusing on ESG, but also we as a firm as well are looking at new product ideas. There's a huge array of products that will be coming into the market. Some of the themes are ESG, SRI, but also fixed income. So I will see probably more of those products coming in, and we had a record year last year. So I think we'll continue to see more innovative products and providing solutions to investors to get exposure. Absolutely.
Keshava, we have a question from a viewer, and actually I urge all of our viewers to IB. You can IB TV or you can IB me directly. And this person basically writes in and say, if you look at Bitcoin ETFs, how are they compatible with the ESG appetite?
That's a very good question. I mean, obviously, it's early days still. There are, some reports you can see. I think recently there were articles about, the environmental impact of mining some of these Bitcoins or the crypto assets in general. I think there's a lot of there's a lot of research being looked into that. There's also another feeling that, the current way the electricity is produced and the energy that we use, we don't use that much of the renewable energy. So maybe we're doing a 21st century products on 19th century kind of infrastructure. So maybe we need to basically upgrade that as well. So I think it's early days, as you've seen probably compared to 2-3 years ago in this particular market to now where we are. It's evolving very, very rapidly. And I think there's quite a lot of discussions taking place on that aspect. So I think it's definitely a good question. And the whole industry is looking at that as well.
Keshava, thanks so much. Keshava Shastri there, head of capital markets at DWS. Now, coming up, Societe Generale vows to return capital to investors. That's despite its first losing year in more than 3 decades, which comes after a slump in trading revenue. More on that and your stock movers next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, plenty of European corporate earnings this morning, so let's check in on the markets and how they're doing with our Danny Berger. Hi, Danny.
Hi, Francine. Yeah, a really, really busy day. We were not spoiled for choice in choosing some of these movers, but Maersk was the biggest loser on the Stock 600 today. It's seeing its biggest drop since March. The fear here is that their outlook for 2021 disappointed and that freight rates might be at a high. The CEO spoke to us earlier, did say that he thinks that those rates will continue to be fine and elevated, still those shares falling. ABN AMRO posting its first annual loss in a decade, similar to what we're seeing from the likes of SocGen. They've also scrapped their 2020 dividends. So that's part of the reason we're seeing shares fall nearly 3%. It's restructuring costs. It's things like the pandemic weighing on their investment banking and other lending activities. Finally, ThyssenKrupp, one of the biggest gainers today, up more than 5%. They're seeing a better rate of cash burn. They think this year it will be about 1 billion euros. Their estimate before was 1.5. Francine?
Danny, thanks so much. Danny Berger there with some of the stock movers we're watching. Now, Amundi's chief executive is stepping down after building Europe's biggest fund firm. Yves Perrier will stay on as chairman of the French asset manager, and he will be succeeded as chief executive by his deputy, Valérie Baudson. Now, elsewhere in the sector, Société Générale has also vowed to return capital to investors. That's despite its first losing year in more than 3 decades, which comes after a slump in trading revenue. Let's get more now on all of these stories with our Bloomberg opinion columnist, Elisa Martinuzzi. Elisa, first of all, what will actually, good morning to you, that's what I should say first, but what will define Valérie Baudson as chief executive at Amundi?
And good morning to you too, Francine. Well, I think she obviously inherits, a very strong asset manager. It's Europe's biggest. It's been growing significantly and it's pulled together various businesses very successfully. I think what lies ahead really is a bid to make this asset manager more relevant on a global platform. And I think to that, they'll be looking at, growth in the bigger markets, which of course are going to be in Asia, not necessarily in Europe. And, and with that comes, challenge to potentially, buy further assets or grow organically. I mean, she's clearly done really well in establishing the presence in the ETF market that she built up from scratch at Amundi. So she certainly has experience in building up business, and now she's got to take that to a global level.
Yeah, and one of the very few females in charge of big organizations in finance across the world. When you look at Société Générale shares, and I know you've written also about possible changes at SocGen, shares rising this morning. Is it a little bit better than expected in terms of earnings?
I think you have to put it in the bigger context here. Yes, I think there was, some signs that potentially it is drawing a line under the difficulties that it's had in 2020. But you are coming off a share price that hit the lowest in decades earlier this year, and is one of the cheapest banking stocks in Europe. I think the concerns still are that it has a business model that has most recently been far too exposed to volatile trading income, and that it really has to put that under control. But also, it has a less diversified income stream than some of its rivals. It's not it's not exposed to asset management, for example, to the same degree as other European banks, and therefore those challenges remain. I see that they have cost cuts coming, but not till later. Actually, costs possibly increasing a little bit next year. So, that'll mean
Elisa,
more pressure to grow the top line.
Thank you so much, Elisa.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Stocks push higher as the Fed's Robert Kaplan weighs in on the inflation debate. He tells Bloomberg temporary spikes are to be expected. PIMCO thinks the market is being overly optimistic. Trump's second impeachment trial steams ahead. The videos of the mob storming the Capitol and the former president's words are key to the prosecution. And earnings season ramps up in Europe. We're speaking to executives from Maersk, Heineken, Equinor, and Societe Generale. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, of course, we look at the margins of, countries or cities reopening or not. Germany probably delaying their reopening because cases are not quite where the German chancellor wants them to be. But if you look at Hong Kong, they're actually opening sports venues. So we track COVID-19, and that goes back to the inflation debate. Do we have stimulus strong enough to actually put the economy on a skyrocket, or do we worry about cumbersome inflation ahead?
Well, there's still a news flow with equities higher today. Futures up 13 says it all. We'll do the data check in a moment, Francine, but I do take your point. It's every nation and indeed every city for itself on the pandemic. I would suggest in America, the news is generally very good.
Yeah, I'm looking at platinum today, actually, in my data check, Tom, something that I haven't done, I think, for
It's close to
at least a couple
Valentine's
of
Day. I
months.
can understand why you're looking at platinum.
Let's get straight to the Bloomberg First Word News. Now, here's Ritika Gupta. Hi, Ritika.
Hi, Francine, Tom. The Senate has cleared the way for arguments to begin on whether Donald Trump incited a mob to attack the U.S. Capitol. Lawmakers voted 56 to 54 that Trump's impeachment trial is constitutional. 6 Republicans voted with the Democrats. Trump's lawyers argued that the impeachment was politically motivated and not a remedy for any wrongdoing. Meanwhile, Senate Republican leader Mitch McConnell is signaling to colleagues that how they vote on the impeachment is up to their conscience. McConnell is suggesting that he hasn't decided how he'll vote. That's a stark contrast with his declaration at Trump's first impeachment. Then McConnell said he did not consider himself an impartial juror. And California has now passed New York to become the state with the largest number of coronavirus-related deaths. More than 45,000 people have died there from the illness. California's averaged 433 deaths a day over the past week. And the European foreign policy chief is vowing to draw up more sanctions against Russia. Josep Borrell defended his trip to Moscow last week after the country jailed opposition leader Alexei Navalny. Borrell has demanded Navalny's release, but it's unclear whether controversy will prompt the EU to trigger a new tool for blacklisting foreign officials over human rights violations. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities correlated, and with equities up today, and the equities are of note. S&P futures up 14. They lift through the early morning here, up 94 as well. The VIX, again. The VIX doesn't give me much information. Ought to be 19. It's not, signaling the volatility that's out there, 21.77. In the yield space, I'm going to call it a churn, and I would note that the real yield, negative 1.04, really, again, doesn't give us much information other than expectations higher. Brent crude, $61 solid a barrel. Francine, sterling on fire.
Yeah, Sterling goes back to what we were talking about, which is actually the vaccination process is much better, much quicker than other nations because they had access to the doses. And we also have some encouraging trial data. Now, global stocks are pushing forward. You know, we did have quite a lot of positive corporate news, Tom, certainly here in Europe. Improving virus trends also helping in the U.S. stimulus plan. I have to say, outside of equities, moves are actually more muted. Oil price, you know, ticking higher, but nothing to put the world on fire. And then I'm also just looking at platinum because supplies are tight. And so I don't often look at platinum, but there you go, 1,219, Tom.
Well, part of the lift that we see in commodities, Jeff Curry at Goldman Sachs just nailing that call. A few others out there as well looking for a final breakout of commodities. Yesterday, there was a breakout of drama in Washington. The impeachment process in the Senate began. It is confusing from House to Senate, with House members front and center in their prosecution of the former president. Let us begin with Raskin of Maryland.
They want to call the trial over before any evidence is even introduced. Their argument is that if you commit an impeachable offense in your last few weeks in office, you do it with constitutional impunity. You get away with it.
This is nothing less than the political weaponization of the impeachment process. Pure, raw sport, fueled by the misguided idea of party over country, when in fact both will surely suffer. I can promise you that if these proceedings go forward, everyone will look bad.
And so there was a drama yesterday, much of it predicted and some of it a genuine surprise. Martin Schenker joins us now, our editor-at-large, executive manager of all of Bloomberg Surveillance and on the impeachment watch. Out of nowhere, a physician growing up in Illinois migrates down to Louisiana, the first Republican since Reconstruction in the Senate. Dr. Cassidy of Louisiana moves over the aisle and adds a Republican vote to assist Mr. Raskin and others.
Yeah, you can thank Bruce Castor for his rambling defense of Donald Trump.
Sounded like me in a bad meeting, right?
It really was a pretty interesting argument. It was more like a, front porch, nice to know you speech, rather than the dealing with the constitutional issues that were before the Senate. And Cassidy just switched his vote. He said, the Democrats won the day for him.
It is a theme, but distant from 17 votes. Everybody in the zeitgeist says there's no way we're going to get a conviction on this. What is the best outcome for the Democrats after they took in one vote yesterday?
Well, I guess the best outcome is to get the court of public opinion on their side, but it strikes me that the people who support Donald Trump out in the country probably aren't really watching this. It's compelling example that of civics for a lot of the Democratic population in the country. But other than that, I guess the Democrats are hoping for a change in public opinion that makes Donald Trump a non-candidate 4 years from now.
Marty, what can you tell us about Mitch McConnell? Of course, he's played a crucial role. Will he be able to sway more Republicans than we think to impeach the president? I mean, he signals it's a matter of conscience.
Yeah, it's very interesting, Francine. According to people who are familiar with his thinking, which means he does not want to go on the record, he is keeping an open mind. Even though he voted against proceeding with this trial, he has signaled off the record again that he is going to vote his conscience, and basically telling all the other Republican members they can do that too. Even with that, the fact that we only got one Republican crossing the aisle and voting to proceed doesn't speak well for whether or not, we're going to get a conviction, as Tom points out.
Marty, how short will it be? So we, could have dragged on, but I think what we're hearing is that it could be over by even Saturday or Sunday.
Yeah, it could. Certainly the Democrats and the Republicans are all interested in having a quick trial. The only wild card here is if new evidence is put forward that actually forces or compels witnesses. Witnesses will extend this quite a bit. Neither side wants to do that. But, these times have been unprecedented. Could something happen? Could someone step forward with new evidence that forces them to call witnesses? It's it's still possible.
What is the timeline after this is over, whether it's Friday or Saturday or it goes on another 2 weeks, whatever? I guess we get to the State of the Union. The president will go to the legislature and he'll do this typical speech and the vision thing and all that. But what do you perceive, Marty, is the next for Washington?
Well, I think clearly the next thing is the Biden stimulus package. He seems to have recognized that speed is critically important here, and he is going to go full speed ahead on the stimulus package using reconciliation. It's going to take a few weeks, but that's where the focus will be come the end of this impeachment here.
For our international audience, what's your summation of the vaccine program? I'm looking at the numbers in the different media, including the virus tracker for Bloomberg, and I just see nothing but good news.
Yeah, there really has been tremendous good news on the vaccination process. In fact, you had the former FDA commissioner saying the issue in a month's time may not be supply, but demand, getting people to agree to take the vaccine, which is a stark contrast to where we were two months ago.
I got my second shot Friday. You going to come hold my hand?
Absolutely, if you hold mine tomorrow when I get mine.
You get yours. Okay, there it is,
I'm so
folks.
excited for you both.
In our hermetically, and Mike
it's
McKee.
Like surveillance vaccination.
Michael McKee
out
front, Francine. Michael McKee already has a double dose going, so we're doing our fair share here.
We're leading.
Get the trend going.
I'm impressed.
Absolutely.
Someone as young as you, Francine, wouldn't understand these weighty, ancient.
No, I'm genuinely actually excited and happy, Tom.
My answer is get vaccine, folks. It's that simple. There's a genuine and natural fear. It takes time to get over it. Talk to your friends who are getting vaccine. One we will talk to, Geraldine Sundstrom, will join us with the Pacific Investment Management Company, PIMCO, their portfolio manager. Always interesting on the fixed income dynamics. Futures up 14, Dow futures up 93. Stay with us. Get vaccinated. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, to talk about the markets, to talk about the reflation trade, and of course, these two opposing forces, is the markets thinking that extra stimulus will mean that the economy will be much stronger, but also worrying about inflation. We are delighted to be joined by Geraldine Sundstrom, PIMCO Portfolio Manager, Asset Allocation. Geraldine, thank you so much for joining us. There's also a brilliant article, actually, our most read article, that talks about some of the PIMCO point of view on what vaccinations mean for the world recovery. Are we a little bit too optimistic that getting herd immunity means that actually we're rid of COVID-19?
Oh, I'm no virologist, and I can't say, but I think we are hoping certainly that we'll get critical mass in the second half of 2021. And we're going to see a rather strong recovery, and in some places maybe already from the second quarter. So that's very much the hope, and this is what is in our forecasts.
So where do you see, Geraldine, the reflation trade going? Do you worry that actually inflation is coming with critical mass to worry central banks, or will they just look through it?
Well, I think we need to differentiate two parts of this. We know very well that in the next few months, inflation is going to pick up because of base effect. And I think central banks so far are doing a good job at explaining, look, this is temporary, this is transitionary, and we're going to look through. So the real question for all of us is, where is this CPI rate going to land comes, late 2021, December 2021, and will that push central banks over the edge? Our forecast is certainly that, we will see inflation recede going into the year end, and it's unlikely that central bank all hit their target. And therefore, markets shouldn't worry too much about that. That said, there are some pressure, especially at the wholesale PPI level. And for those who worry about inflation, or for those who worry that we are getting this forecast wrong, and there is an easy way to deal with this, is to buy inflation-protected treasuries. A lot of the juice might have gone because break-even inflation rates are higher. But certainly, if central bank ought to hit their target, there's more to come in the pricing of those, and they can be a neat hedge. So I think, it's about being a bit humble about this, not worry too much, and put some inflation-protected securities in portfolio.
I'm going to steal that phrase from you. I love that. To be a bit humble really sizes it up for me. Geraldine, give us the nuance away from higher inflation, price down, yield up. How do our listeners and viewers defend themselves from the idea of price down given inflation?
Well, I think there is a time when, inflation goes up, and it's a very healthy phenomenon for risky assets in general. Inflation has been too low, and in some way we should rejoice, right? And I think central bank will rejoice as well. I think, it's good for equities, it's good for the economy and all the rest of it. So what would be worrisome is if it gets out of control, and certainly we're a long way from that, a long way from having to worry about this.
Well, we're a long way, to worry about. I get the timeline, a long way to worry about it, but along the path to someday where we worry about it, do you see price erosion with a set of yields higher, or can you actually do this without price erosion?
Well, yields have been climbing a little bit higher, and certainly there's room for yield going a little bit higher still. That would be a healthy development. And at the same time, I would point that as, yield on bonds go a little bit higher, they become more attractive from a carry perspective. But also in multi-asset portfolio, they become, again, a potent hedge. So, there will be demand for fixed income as the yield go back up. So it's not all, bad news.
Where does the search for yield actually push investors to, Geraldine? Yesterday, we talked quite a lot about junk bonds, high yield. Is there something else that actually you think will get a lift from this market move?
Well, I think you've been talking about it. People are looking for various ways to sort of enjoy this recovery, and we are seeing this, in in credit, but we're also seeing people going into emerging market bonds with more confidence with this recovery, and also in commodities and precious metal, which all make sense to have an allocation to in portfolios nowadays.
Geraldine, is there something that actually you know, we talk a lot about frothy valuations in the equity space, but is there something in your world that you think is just not right, that either it feels in bubble territory or, you know, that is due a correction fairly soon?
I don't see much bubbles. I think they are part of the market, which maybe or relatively fully valued or getting maybe on the generous side of things. But talking about bubbles would probably be an exaggeration, I would say. That said, what we tell people is, look, like, you know, generic betas have run a long way, and trying to, you know, juice more return out of that is going to be complicated going forward. So what we recommend is to be a lot more specific, a lot more granular in which credit you're pinking, in which equities you're pinking, and really starting to do the active management job, really. And there we still find great opportunities in a number of sectors that still haven't completely priced a healthy recovery.
What is your mix of IG versus high yield? I mean, I understand there's a U.S. dynamic to that, but in Europe and the rest of the world, how do you discern between an investment grade purchase of a debt instrument versus high yield, whether it's quality high yield or garbage?
I think it's very much driven by the sector and the work from our credit analysts. It's very sort of granular and detailed, and there's no sort of one rule blanket covers it all. That said, what we really like as a sector is real estate, both agency and non-agency mortgages. We think it's a sector that's very supported by, you know, the stimulus, high savings rate, monetary policy. So this is one where we feel confident. And then it really becomes a case by case. And it's hard to make a general statement. But, you know, if you look, there are certain sectors that were hit by COVID, in gaming or leisure, where we find, you know, very attractive value. But if you want to play it safe, I would say the real estate sector is certainly the one to look at.
Geraldine, thanks so much. Geraldine Sundstrom there of PIMCO stays with us. Now, coming up on Peer-to-Peer Conversation with David Rubenstein, Charles Koch, Koch Industries Chairman and Chief Executive. That's at 9 p.m. tonight in New York. That's 7 p.m. Thursday in London. And this is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishika Gupta with the Bloomberg Business Flash. Twitter reported fourth quarter revenue that beat estimates, but the social network added fewer new users than projected. And Twitter warned that audience gains in 2021 will slow down compared with last year's surge that was fueled by the pandemic. Don't count on other companies following Tesla's lead when it comes to Bitcoin. The electric car maker has invested $1.5 billion in the digital currency. JP Morgan suggests that other corporate treasurers will be reluctant to do the same because of Bitcoin's volatility. Corporate treasury portfolios are stuffed bank accounts and other investments that minimize volatility. And the controversial former pro football quarterback Colin Kaepernick has joined the SPAC frenzy. Kaepernick is co-sponsoring a blank check company that will look for a business in the consumer sector. Kaepernick hasn't played in the NFL since 2016, and that's the year he launched player protests during the national anthem to bring attention to racism and police brutality. And that is your latest Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, the focus is firmly on inflation, so we continue looking at the reflation trade, but we also had quite a lot of earnings in Europe, and so that's filtering through a little bit of optimism on the markets. I'm also looking at platinum just because there's a supply squeeze, and you can see the price of platinum currently at $1,221. I don't do that very often, but it's quite interesting just to look at. If you look at outside the equity space, Tom, moves a bit muted, oil prices ticking slightly higher.
Commodities, I'm going to call it a lift all in all. In yuan, 6.44 on Chinese currency gets my note. She has hit an advertising home run. She is Mari Barra of General Motors, and I can only say the response to her Super Bowl ad on Norway with Will Ferrell has been absolutely phenomenal. If she can run a company like she can run a Super Bowl ad, she's got it made. 8:30 this morning, Barra of GM. Finland? No, you're in Sweden.
个就是我们看中它的那个品牌吧，它品牌就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 上，就手机扫码，然后微信和这个支付宝扫我们这个车上的这个二维码，大家就可以进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，这个柜门会自动打开。
支付成功，请拉开右侧车门取货，并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Question for me will be, how persistent is it?
How much of a pop in prices do we get as the economy opens and consumers have money in their pockets? And then second, how sustainable is it?
If we're able to get people broadly vaccinated, we're going to make big improvements on unemployment. And it wouldn't be surprising to see the cyclical elements of inflation build.
The policy will remain accommodative despite the reflationary pressures building. So the front-end rates will remain anchored.
There could be some momentum building behind yields.
We're going to get the reflation of airfares and hotel rates.
Most of the investors believe that, you know, the inflation and rising rates are a bit out there, and that there's probably more downside risk to rates than huge upside.
Nice set of voices there on the reflation front. It is front and center, and of course that means fixed income. We've been doing that with Geraldine Sundstrom of PIMCO and asset allocation, and she knows PIMCO does a lot in the equity space as well. How does this redound over to the equity markets? I mean, bonds, yield, price. Forget about it. Equities to the moon. How does this great bull market end, Geraldine?
Well, for now, I think we still have some good years ahead of us with the recovery that's like both cyclical and secular in nature. I think in equity, it's slightly different. I call it occupy the supply chain, in the sense that we start to see in wholesale, in PPI, you know, shortages, price pressure, and therefore there are, you know, interesting opportunities where there's, you know, good pricing power, tight supply for quarters and in some cases years to come in the semiconductor industry, potentially in the shipping industry as well. So I think it's pretty exciting times. And what kind of like makes me sometimes a little bit surprised is that we're seeing already this type of pricing power and shortages when the cycle has barely started. Right. Usually these are patterns you would see late in the cycle. So I think for now, this is a particularly interesting time for equities where you have, you know, margin can increase in some cases, and central bank are still pretty zen, waiting for all of this to trickle down, maybe one day into CPI.
Geraldine, one of the great insights this week was from Howard Ward of Gabelli with decades of experience, and his distinction was we don't understand the technological revolution, obviously in technology stocks, but also tangential to other sectors as well. How do you apply the new technology over to non-technology sectors?
Well, I think there are, interestingly, some pretty sort of old school sectors which are becoming, you know, part of the disruption. And you have things like, forestry, for instance. This was like an old cyclical business, which now gets involved into decarbonization, into sustainable packaging, into biofuels. You have to rediscover certain sectors just beyond the regular tech and digital world, which, of course, is growing very strongly.
So, Geraldine, what are those sectors? And is there a link in how we'll work from home or elsewhere post-pandemic? Or is this just something, a part of the market that has been so far unloved?
I think, it's out of the radar. The recovery, we call it, is going to be green and digital. And in some ways, we are reinventing the way we do energy, the way we do transport, the way we do cars and all these things. So it's about sort of, being very careful about this secular trend, these pivots, and rediscovering the industry that are going to come back to the fore. So energy, transport, and sustainability, decarbonizations, all these things that we think are going to see a very nice cyclical and secular uplift, which is a little bit different from previous cycles. So history only rhymes here, it's not repeating.
Geraldine, what are you buying right now? Is there something that actually looks more attractive than others? I mean, you just mentioned maybe certain sectors. What do you do country by country?
Country by country, like what we are noticing is this green and digital recovery. Where are the enablers of it? Who are the companies that are going to be the supplier of this, renewable energy, of these EV, the batteries, the semiconductors? And when you look for that, and you actually, look for those enablers, what you find out is that they are very much in Asia. So all the capacity and the supply chains are very much anchored in Asia. And so countries like Japan, China, South Korea, and Taiwan are looking very promising. And more often than not, valuations there remain relatively cheap, especially in a global context.
Geraldine, thank you so much. Geraldine Sundstrom there of PIMCO with some of great thoughts on this, rebuilding better theme with ESG at the forefront. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. House impeachment managers argue that Donald Trump must be held accountable, and the Senate has agreed. Senators voted 56-44 that it is constitutional to try the former president on whether he incited a mob to storm the Capitol. 6 Republicans crossed party lines to vote with the Democrats. That sets the stage for opening arguments. And Donald Trump has asked Palm Beach to let him stay full-time at his Mar-a-Lago resort. A lawyer for the former president says he should be allowed to live there since he's an employee of the private club. Local residents have argued that Trump shouldn't be allowed to live at the resort permanently because of zoning rules. And House Democrats want major changes to Medicaid as part of President Biden's coronavirus stimulus package. Amongst the revisions, they want to end drug rebate caps for pharmaceutical makers. House Democrats also want to expand health insurance programs for the poor. And 1 dose of the Pfizer-BioNTech vaccine offers 2/3 protection against coronavirus. That's according to data seen by the UK government. The data shows that 1 Pfizer dose gives as much as 65% protection. 2 doses see protection rise to as much as 84%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Thank you so much, Ritika. Now, up next, we continue looking at Trump's impeachment, the length of it, and exactly what the Republicans will do next with Thomas Gift, UCL Director of Center on U.S. Politics. That's coming up shortly, and this is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. We're following markets with a nice lift to the markets. Lots of different talk out in the zeitgeist of the why of that. And, of course, we're seeing it tangentially. I can just note Brent crude 61.52 with a nice persistency. Not a big move on oil, but nevertheless a persistent move higher. There is also a persistent attention on the new administration in Washington, of course, distracted by impeachment. Joining us now, Thomas Gift of UCL in London, the Director of Center on U.S. Politics. Thomas, give us a judgment you have of the path to unity and the critical path to normality that President Biden judges is necessary. Is he getting there in these early days?
Well, I think so far so good. There haven't been any major stumbling blocks, but the fact that impeachment is looming over everything that he does, I think, really delays that process, and it makes it more difficult for him to make the kind of inroads that he wants to. It's also worth noting, of course, that driving forth this really partisan stimulus package opens himself up to significant criticism from Republicans that he's not behaving in kind of the post-partisan manner that he promised. I think that that's, certainly something that he needs to be concerned about in his early days.
When does the primary season kick in? We have an election in 2 years, November of 22. There's a primary season that summer, obviously, but when does the primary ballet actually begin?
Well, I think that the primary ballet begins right now. And for Republicans, especially in the Senate with this impeachment trial, the vote that they render on Trump is going to loom extremely large when it comes to coming up for re-election. That's the same for those members in the House. In Washington, the election cycle basically never ends. One class of new senators and Congress members and a president comes in, and at the very next moment, they need to start fundraising. They need to start thinking about the years ahead. So we're basically in a cycle right now where it's unending.
Professor, who's in charge of the Republican Party right now, or what is the Republican Party right now?
I still think that Donald Trump is in charge of the Republican Party, and unless someone unseats him and takes over that position, he has more control than anyone. And the fact that so many Republican senators, especially in this trial, are so reluctant to mutiny against him, to revolt against him, is indicative of the fact that Donald Trump still holds tremendous sway. And we saw some polling numbers that came out in the last few days that show that a modest majority of Americans actually support the conviction of Donald Trump. But that's not true within the Republican Party. About 80% or so want to see him acquitted. Donald Trump is going to cast a long shadow over the Republican Party, and he continues to do so right now during this impeachment trial.
Do you see a third party merging? I know it's considered crazy, but actually, given where we are, could that happen?
I just don't think so, because in essence, then that would self-destruct the conservative movement within the United States, and Democrats would essentially have free reign to kind of enact their agenda. I mean, Donald Trump wants to keep this in the backdrop. He wants to kind of make a case that this is possible, but the way that the United States political system is structured, it's just not something I don't think that will happen.
Tom Gift, you just did a joint effort. I saw it out on Twitter with the London School of Economics, where you tried to figure out impeachment. And one of the themes of that event UCL did with LSE was the idea of a Democratic defeat in impeachment. Explain it to our audience. How do the Democrats not have a political win out of this impeachment process?
Well, I just don't think that it's obvious that they will get a political win out of this process, precisely because the end result seems almost like it's inevitable that Donald Trump is going to be acquitted. And what's Donald Trump going to do if he's acquitted? He's going to spin this as something that it's not, an exoneration. That's going to embolden his supporters. I think that's going to allow him to loom even larger over the Republican Party. It's going to allow him to position himself potentially as a 2024 candidate, or at the very least be a kingmaker within the party as to who next takes the reins. And so, you know, Donald Trump will kind of view this as another slap on the wrist, I think. Ultimately, he's going to come out of this in the clear. And if that's the case, you know, Democrats, I do think, have to ask themselves, what is the end game? Impeachment is a political process inherently. And if you're not going to win this, I do think that there are legitimate questions as to why you're going through with it.
Where do moderate Republicans go?
Gosh, that's a really big question. I think that there's going to be this internal battle between the moderates and the Trumpian Republicans in the next few months and years. I think moderate Republicans basically just need to continue to make the case that the Trumpian wing of the Republican Party is too extreme, that it doesn't represent the values of most Americans. But that's really difficult when such a high percentage actually support the president. So I think basically what we're going to get is an equilibrium where there's a Trumpian wing in the Republican Party and there's an establishment wing within the Republican Party. They're going to find common ground on issues like deregulation, conservative judicial appointments, tax cuts, and those sorts of things. But in terms of the tone and the substance and the style, the two wings couldn't be further apart.
Professor, is there something that the Biden administration can do in terms of policy to actually get, voters away from that Trump base?
That's another great question. I mean, they need to look at policy areas where there's at least conceivably some bipartisan consensus. I think at the top of that agenda has to be infrastructure. This is something that Donald Trump tried to get through in 2017, was unsuccessful in doing so. But there supposedly is some degree of bipartisan consensus, both on the Democratic side and the Republican side, that this could be a bridge to bring the parties together. But I view that as kind of very difficult because a lot of this will get wrapped up, for example, in debates over climate change. A lot of it is going to get wrapped up into debates over the deficit and the debt, especially amid COVID-19. So I think first order of business for Joe Biden is to get the virus under control, get this stimulus package through, and then he can start thinking about some of these other items that might have bipartisan consensus. But I think ultimately it's very unlikely.
Professor Giff, thank you for the brief. With UCL, the Director Center on U.S. Politics, here on a week of impeachment. Again, we'll have full coverage on this through the day, particularly David Weston focusing on balance of power. On there, well, a view on business, the U.S. Chamber of Commerce Chief Executive Officer Suzanne Clark in the 12 o'clock hour. I'll get it out. 3, 2, 1. In the 12 o'clock hour. There, I did it. Futures up 12. Good morning. Thank you.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
This is under the radar.
This equity market's looking good.
You heard it first here on Surveillance.
The conversations you need to hear.
Always going to be fascinating here, particularly the view forward.
The business team you love to watch.
John, I would wrap into your lousy data check.
I've got a deal with you for the rest of this year.
This is what I do to keep you two apart.
Live from 6 to 9 a.m. starting February 16th on Bloomberg Television.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. Shares of Cisco are lower this morning. The company reported a big decline in sales to large companies, and CEO Chuck Robbins warned that the coronavirus is still hurting growth. Cisco gets a large portion of its revenue from selling network hardware. Robbins has tried to shift that more to software and subscriptions. Chesapeake Energy once helped ignite the American shale gas boom. Now the company is emerging from bankruptcy, just a shadow of its former self. New CEO Doug Lawler is fine with that. He tells Bloomberg that Shell has been marked by growth, and it was growth for the wrong reasons. Lawler also said the cash-burning days for Shell explorers are over. And Lyft is inching its way towards break-even. The ride-hailing service reported a fourth-quarter loss that was less than expected. Lyft had been squeezing more revenue out of each customer, a result of deep cost cuts. And that is your Bloomberg Business Flash. Tom.
Ritika, thanks so much. Greatly appreciated. It is percolating out there, maybe off the radar, but nevertheless part of global finance. And that is the challenge and the reality of Chinese fiscal dynamics. Joining us, our Chief Asia Economist Correspondent, Enda Curran, right now. Enda, there's 8 ways to go here, but what it comes down to is a transparency of the Chinese finance system and the many shadows that are out there of China finance. How murky are the shadows?
Well, look, there's no doubt that on the shadow banking side of things, there has been a lot of question marks over transparency over the years. Tom, some people say there's been some improvements there, but we've had fresh debate now about what's happening with China's credit system after figures for January that showed a record jump in loans. Aggregate financing was up over $800 billion in the 1 month alone. Now, that reflects, however, a pretty strong economic rebound because loans, medium and long-term loans to companies and households have hit records. And analysts are saying that's because manufacturing is going gangbusters again in China. We know that the consumer story is slowly coming back. And the bigger picture remains is that broad money supply is actually slowing. So the authorities are getting loans into the economy because there is demand for it, but their bigger picture is that they do want to keep an eye on the overall speed of lending, and that the PBC continues to preach that they're not going to tighten or loosen too much on either side.
We've heard this from other countries as well, but the unique feature here is, of course, the structure of the government. From your observation, are they willing to take a loss? Are they willing to basically inflict creative destruction?
Well, look, at the moment, there's no doubt that the authorities wanted to support the economy, to get it back on its feet over the past year from the pandemic. And right here, right now, they are enjoying something of a V-shaped recovery. So the thinking is that the government is in a stronger position now to take its foot off the gas. Tom, they are allowing companies to default in ways that we haven't seen before. The central bank is talking about keeping an eye on the level of stimulus that it's putting into the economy. It's not going to tighten overnight, but at the same time, it's not exactly sounding especially dovish either. So the broad point is that the economy has managed to stabilize itself. It's back to, or at least very close to, its pre-pandemic levels on all the key metrics. And from here, the authorities are in a strong enough position whereby, yes, they can start to taper and rein in some of its support. And that's what it's expected to happen as the months go by this year.
And how unbalanced is the recovery in China right now? I know we've had some divergence in activity, but also divergence in inflation. And how do authorities actually try and rebalance that?
Yeah, I mean, it is big. It's the big question, Francine. On the one hand, as I said, manufacturing is going gangbusters, global demand for work from home technology, for healthcare kit, all of that's getting made in China and getting shipped out as fast as it can. That's going strong. But on the consumer side of things, even though the virus has been somewhat under control now in China for many, many months, even though there was a recent scare, the consumer still isn't back to where they were before the virus. And this could be a lesson for the rest of the world too, in terms of how long it takes for that confidence to heal and how long it takes for old spending habits and the rest to get back to where they were. And I think that's especially going to be seen now over this Chinese New Year period that we're going to starting tomorrow. Typically, it's the biggest holiday of the year in China. This year it's being disrupted because the government is trying to keep the reins on everyone's movements in order to make sure that the virus doesn't spread after a scare in the north of the country earlier this year. So China's economy is on strong footing. It is enjoying a very strong rebound, but as you say, there is an imbalance. Yeah. It's that the consumer side of things isn't back where it was.
Could it actually be exporting inflation to the rest of the world?
Well, this is a good question. We had inflation data today. The consumer side of things quite negative, but on the producer side of things, it is back in positive territory. That does speak to better demand. It certainly will help the companies repay their debt. It will help their profits. The question becomes whether or not the prices that they're having to pay for commodities and their input items will get shipped on and passed on to the rest of the world. We already know that China's exporters are suffering from a container shortage that's sending the cost of sea freight through the roof. So it's one to watch over coming months as to whether this combination of PPI on one side and, of course, what's happening with the freight storing the other does translate into China starting to ship inflation to the rest of the world.
And Curran, thank you so much. Greatly appreciate it this morning on short notice from Hong Kong here on the shadows of the Chinese finance system and a raging debate about which way China goes, linking monetary policy, not so much into fiscal policy, but into their financial policy of their banking system. Another expert on this, William Lee, will join us with the Milken Institute, their chief economist, just wonderful on the Pacific Rim. But Bill Lee as well on what we're seeing in the rest of the world with the fiscal impulse. Futures up 13, Dow futures up 89. I do want to point out Brent crude with a lift, gold 18.42 the ounce. Stay with us. This is Bloomberg.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
you have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
This morning, consider JP Morgan up 36% since November 6th. Small caps, the Russell 2000, up 40% since November 6th. And it continues this morning. Equities lift. Brent crude, $61 a barrel. There is new sterling strength. Well, death and hospitalization data in America, it is better. Vaccination, it is working. And there is a doctor in the Senate, Dr. Cassidy of Louisiana. He votes with the Democrats. The second impeachment trial of President Trump, it will continue. Good morning, everyone. Bloomberg Surveillance. Tom Keene in New York. Francine Lacroix in London. Francine, does anybody in London care about an impeachment trial?
Yeah, a lot of people actually have been watching it. I think it's the lockdown effect. People just spend a lot more time with their television sets, Tom. Yeah. And so actually, it's quite exciting. You know, I wouldn't say the pageantry, but certainly there were a couple of missteps yesterday that got people entertained. And you just wonder, as, you know, one of the oldest allies, Europe, you know, there's always a lot of intrigue and interest in seeing where the U.S. goes next. This could have a huge implication for foreign policy and how the U.S. is seen, not only from the